No, Darren, it's not a actual question. Uh, in the group chat, right? You asked me what did you see on gold. So I just responded to that, and I just wanted your feedback. Whether
So more specifically, there was a time over here. Oh, there's a lot of feedback on your microphone, so I'm just going to mute you, Sivakran. You sent a message here about, I think it was EU and GU maybe, or something. I think it was this one. Oh no, maybe this was someone else. Okay, this wasn't you, Sivakran, never mind. So over here, this was a question that they asked, was that if we look at the price action here on this, what seems to be SMT possibly is what I think it's Walter here that he's trying to say. So he said he needs some clarification, and arrows to me read SMT, but the fact that DXY went lower to close the fair value gap, but EU did not go high to close its fair value gap tells me EU is being manipulated away from symmetry. So instead of going higher to close the fair value gap, it's being manipulated to go down instead. Again, some further SMT explanation and chart examples will much be appreciated. So, okay, so we just addressed this elephant in the room here. So with this sort of setup that he's drawn out here, in a way, it's sort of wrong what he's drawn here, because he's drawn from this particular candle over here and this particular candle over here. And if you were to say the arrows are pointing in the same direction, then it's not really SMT, but he's sort of done it wrong here, because if we remember the 4 characteristics of every single candle on any single time frame, it is the open, the high, the low, and the close. So he's done it wrong here. If he is looking at this candle over here, temetope, this candle, what is this that he's attached this white line to? What is this, the open or the closing price of this candle?
If it's a down candle, that will be the closing point.
Okay, so if he is looking at the closing price over here, his line, okay, he's attached it correctly, because obviously looking at it over here, what should he be doing on reverse? Because obviously I'm assuming that the one is the dollar index and the one is the euro, which looks like the dollar is at the bottom. So what should he be doing?
So on the top one, the arrow should be anchored from the open of that down close candle instead of the close of that down close candle. So on the one on the top, no,
okay, not quite, because he's correct, right? Isn't he? If you look at what you just said about that red candle on EU makes a close, then where is the close on the blue candle? Over here. That's right.
So an up candle close at the top. Yeah,
it's right.
Yeah.
Okay, but what is incorrect though is the following. So he's marked it out correctly, but it's still incorrect because he needs to do this. So if we go back there and we look at that same chart on the weekly over here, and we do the same candle procedure over there, he marked out this candle over here. So if we do that and we look here, this is the candle he was using, and over here is where he should pull his SMT from, over there, and would be this candle over here. So the opposite to this was the close, and the opposite to this is the close. So you can see here, although he's sort of got the right mindset that the one is the close, then the DXY is the close, but obviously his DXY is at the bottom and mine is at the top. Okay, it really doesn't matter. So the one must be the open and the other one must be the open, or the one must be the close and the other one must be the close. So when you are looking at the open, high, the low, and the close, you are looking at a mirror image, or should be looking at a mirror image of the opposite for whether you're looking at like EU or GU, whatever. So in this case, he's looking at EU. So when he's looking at the closing price of this candle over here, he is looking at the closing price of this candle over here. Because for the most part, you know, the market is supposed to be symmetrical. You know, the DXY and EU should be symmetrical. And over here, you know, even the candlesticks on EU look very, very similar to the DXY. And there's times when it doesn't. And that's when the times is when we say that either the given pair is under distribution when it's selling or under accumulation when it's buying over here. So in terms of this, if the DXY traded lower into this candle's open over here, what is not happening over here on EU? Anyone?
It's not trading into that candle's open, the one that you've marked.
Yes, because if the market was symmetrical like it should be, right, then EU should have traded into this same candle's same closing price. So when the DXY traded into this candle's closing price over here, now forget about the order block and the old high, etc., etc. We're just looking at open, high, low, and close. So in terms of the candlestick, this candle should have been the same on EU, except it wasn't. And because it wasn't, that is non-symmetrical, and because it is non-symmetrical, that is SMT over here. So he had his arrows sort of like, let's go just back quickly to his screen grab here. So what he should have done is just rather draw his candles where EU should have traded into the closing price of this down close candle, just drawn a straight line and a straight line here, and see that when one of them touch that line, is the other touching that line. So I think he's maybe just confused himself over here, where, you know, he's sort of just done the wrong thing. And even, you know, not even using that candle, if we look again at the chart over here, this is a down candle, this is a weekly chart. So this down candle was the last down candle before this move away, creating a void. So we can say that this over here is what? Someone, anyone but Temetope. What is this down candle here?
And bullish order block.
Okay, thank you, not Temetope.
Oh no, that was me. That was me.
Yeah, I know.
Oh.
But you weren't supposed to answer. But anyway.
Oh, sorry, apologies.
This is, like you say, an order block over here. So this order block here that is bullish and creates a void and price moves away is the bullish version on the DXY. So therefore, this is the last up close candle before the move down on EU. So that is the last down up close candle. So that makes this the bearish order block and this the bullish order block. And it's the same thing really here, that if we mark out the high over here of this, sorry, that's not perfect high, but who cares? This high over here of this order block, this old high over here, and this over here, you can see it is still not symmetrical, because when price over here trades into this order block, and even if you put it on something like this and you do on the actual candlestick body, price trades into both the old high over here of this order block and also the opening price, or opening price. So that would be the order block's opening price, and over here this would be the order block's, the bearish order block's opening price, and it traded to neither on EU over here. So this on its own, whether he used this candlestick over here or this order block over here, you can still see that the market is not moving symmetrically, because then when last week when the DXY traded into the order block, we should have seen the same move over here on EU, and that did not happen. And then in relation to that happening, what can we say about EU and GU? Are they sort of moving in the same direction, guys, or are they completely opposite to one another? Emmanuel.
The opposite. That's non-symmetrical.
EU and GU is non-symmetrical. Is that what you said?
Oh, EU and GU, not the index.
No, forget the index. I'm talking about the relationship to EU is to GU, or GU is to EU? Are they moving generally in the same direction, or are they completely opposite to one another?
I really never checked on GU only. Can you put it in the chat, please? If you can.
Just before I show you charts, just think about it.
I guess it's non-symmetrical.
They're non-symmetrical.
Yes.
Okay, and Alex,
They are correlated. Okay.
are GU and EU symmetrical? You can, if you can't talk, you can just type your answer. I can't hear you, so. Okay, Temitope, you're probably jumping off your seat. What is your answer?
I'm not too sure actually on this one, but I would say they move in the generally the same direction.
You are correct. So EU and GU are, for the most part, moving in the same direction. So like, for example, because they're both related to the dollar, and the dollar is the dollar index, if the dollar index is falling, generally EU and GU is buying. And if the dollar index is buying, then EU and GU is generally selling. Obviously, a couple of candlesticks difference. They might not sell on the same day, but generally overall on the higher time frame, if the order flow is bullish on the DXY and it's going up, then EU and GU should be going down, because they are inversely correlated to the DXY and to each other. They are obviously two different pairs. One is euro, one is pound, but they are both linked to the dollar index, which is the dollar. So if the dollar is strong, then obviously GU must sell, right? Or EU must sell. Okay, so what we can also say is that when we look at EU, and let's say we're trading EU or we're trading GU, what we can say about them is that the following is that we should see symmetry on both their parts over here. So if we look, and we've just drawn out those lines over here on the weekly, for example, and we look at those same little zones of markings here, when the dollar index was trading into that old high of this order block and the body of that order block over there, we can actually see GU trading into this up close candles open and the low over here. So in terms of the symmetry to the DXY, you know, price was doing what the DXY was doing. However, EU was definitely not doing that. Okay, so you can actually see that that is very, very similar to EU over here. And while we see it doing it on GU, we do not see it doing it on EU. So that would be some sort of exercise for you guys, is to go and look at, if you've looked at SMT, say on EU versus the DXY, compare EU, GU and DXY together, because there should be some sort of like symmetry, both moving in a general bias of either buying or selling. And when there is not symmetry, then obviously there is manipulation. So there was a lot of manipulation last week when price traded on the DXY into this order block over here. You can also go ahead and say that, well, if that is the order block, here is the old high, here is the opening price of that sort of area over there, and then we've got a third one over here. If this is the order block over here, below this order block would sit some kind of rejection block, if we could say, because then the below here would be the old low of that range. So, you know, forgetting about PDAs, we're just looking at open, high, low, and close. This over here would be the sort of close, right? This would be the close of the DXY's down candle over here. And if we are looking at the same down close candle, we are looking at this up close candle and pulling this across. If this over here on the DXY is the close of this down candle, then this is the close of this up close candle over here. So in terms of how symmetrical things are, yes, price traded into this order block, this weekly order block over here on the old low and the opening price, but GU went a little bit deeper and traded into the closing price, or the rejection block part of this up close candle over here, whereas the DXY was quite some distance away over here. So in terms of symmetry, let's just remove some of these lines over here. We can actually see that our little arrows that we draw, this closing price over here and this closing price, this one sort of made relative equal highs. Well, if that's the case, then why did the DXY not make equal lows? And because it didn't, therefore it is non-symmetrical, SMT over here. So I've shown you how to do SMT, based on swing highs, swing lows, but there's really no limit to what you guys can use in terms of SMT, as long as you can understand what the market structure looks like in terms of open, high, low, and close, and how the market works. Then there's many ways to actually use SMT over here. All SMT is just a tool to identify manipulation in the market. That's really all SMT is allowing us to see. And when we see things like this in the market and price trading higher, but it's really not trading low on the DXY, they're accumulating the dollar index. So sellers would be coming in saying, oh, the dollar index is bearish and GU or EU is bullish, and everyone's going to be trying to buy this because they'd be willing to buy these GUs and EUs at higher prices. Whereas we can clearly see the strength and weakness. This is how I determine, if what I'm seeing on GU is actually strength or is actually weakness, because, sometimes there could be a case like there's a 4-hour bullish order block. So let's just go here in some kind of premium and people try to trade that, right? So for example, let's say, I don't know, maybe someone tried to say that over here was a bullish 4-hour order block, and then price traded into it, and they tried to buy it over here and they put their stop just below there. Maybe they were just taking an intraday trade, but in terms of what's happening on the higher time frame, prices under distribution, it's not a good idea to buy a 4-hour bullish order block in a higher time frame, say daily, weekly premium array. Okay, because this is a area of daily and weekly premium over here. And not only is it a daily and weekly premium area in terms of our array and our PDA elements, order block, void, etc., but it's also distributing over here. EU and GU are under distribution, right? You can actually see exactly what I said this morning in terms of, you guys ever pay attention to anything I say, well, you would have seen that I did say that this was going to happen, is that EU should target and have this draw on liquidity over here. And the reason for that is because it's under distribution. So the higher time frame is still bearish. And when it took Friday's low, because this would have been Friday's low over here, there was a small little pullback only to retrace to go lower. And where is it drawn to? This consolidation, because above consolidations and below consolidations sits sell side and buy side liquidity to exit short positions or take new long positions. So nothing now on the chart right now will tell me to buy this unless more price action occurs. Okay, so there's nothing right now that I can say that I would buy under these lows to, say, make a turtle soup or whatever. I would have to wait for new price action. So as it is now, it's Monday, so don't expect too much, but this is an obvious draw on liquidity. Does anyone understand? Yes, Tivakaran, go ahead. I see you've got a hand up there. Go ahead, ask your question.
Darren, you were saying you would be looking for some new price action, right? To go for a buy. What is that? What kind of price action you expect here?
Okay, I'm speaking from a hypothetical scenario, Tivakaran. Not that I would want to buy it because I would be bearish, okay, and I'd only be looking for sells personally, okay? But if I was trying to, say, buy for intraday or New York retracement or just buy into tomorrow to sell for the rest of the week, this is potentially the area of price action I would look to attach a buy order to, because there is sell side liquidity over here. And the price action that should occur inside of the sell side liquidity would be the formation of a new array. starting from an old low, a rejection block, an order block, a void, a breaker, a mitigation block, or SMT coupled with any of those confirmations.
Okay,
It's
okay.
too early to say that that's what's going to happen now. Okay, what we can though see is that currently, while GU over here is targeting this sell side liquidity, is the DXY targeting this buy side liquidity?
It looks like that only.
Okay, so in fact, right now, over here, this one over here has been taken, but this one over here has not been taken. Now, it could just still be early and price may still travel higher over here into this buy side liquidity. But, you know, I can't say what isn't going to happen. But what I can see right now is that there's a possible formation of a low over here. And while that does not make a move into this buy side liquidity right now, from the price action that we see, there is what happening here. SMT, guys, this is SMT right here happening over there. So in terms of the high time frame though, you know, this is a very low price. So in terms of from where we were to where we are right now. So if we were bearish, I'd say we would wait for some kind of maybe retracement into this order block or above these old highs before considering to try and sell again. Alternatively, if we are looking to buy, then this would be a good area to look for a buy. So how would we look for a buy? Well, higher time frame suggests that this is an area of accumulated orders. So there is sell side liquidity over here. This is also, as far as I can remember, some kind of daily rejection block over here. Okay, so price is traded into there, and you can see that over here it has not done that on the DXY. So currently on the daily, 4 hour, 1 hour, all of those time frames, this is currently SMT. Now that can change in the next hour, the next 2 hours, but in terms of where we are right now, you could potentially look on like a lower time frame inside of this liquidity for some kind of, you know, SMT move away from here to go higher over here. So if we look at currently like lower time frame price action, this is a 5-minute chart. I don't really see something that's visibly clear in terms of SMT. You could probably go down to maybe a 1-minute chart. This is definitely making a higher high on the DXY inside of the buy side liquidity, or sorry, sell side liquidity for GU, where it makes a clear small lower low, and this one makes a clear much higher high. So it's not really equal. It's not really something I would trade, but you can definitely see the reaction below this line over here, where there is sell side liquidity over here. Does anyone have any questions regarding this price action that's occurring right now? Okay, so you all understand hopefully what's happening and what I'm showing you right now in terms of that. Okay, but let's just quickly look at the recap over here of GU. Okay, so we're just wrapping up GU here as to what happened last week, and Roger also pointed it out in the group here that when price rallied from that news event last week over here, there was this big move higher over here, this candle, and there was the same one in EU as well. There was a big move to the upside over here, and when this happened, it was clearly seen that GU was under distribution, because if we look at that same move over here on EU on that daily chart, there was also a large move to the upside, but EU was able to sort of break out of its consolidating area over here. So it was able to make higher highs over here in this up move over here. But if we look at GU, it was not able to make higher highs here. And we can clearly see that there is this move that is sort of non-symmetrical, clearly visible, that this is the low of this high, and this high is this low. So there was a lower low, but a lower high. So what does that tell you? That is a daily SMT GU is under distribution, and it's visible on the weekly chart as well. And when I said that the weekly chart, if it was able to close by not taking that high, that would be a weekly SMT, which is a strong indication of, you know, selling taking place or pushing price lower over here. And that's likely what we would see for the remainder of the week. And price would probably just take liquidity from this previous low over here. So really we would want to see price action moving higher over here. There is some targets over here. If this was the weekly, we'd be looking to the daily for some targets, and then here would be a consolidation on the DXY with a nice open void that has not been traded to. So if price was going to push higher, I would recommend that this would be the target of that move over here, as well as sort of GU over here, sort of something similar. We've got some of this liquidity over here, and there's this open void with this order block. We could look for price to, I know some of you have already marked this up, but that's effectively where I wanted price to go, and I didn't think it was going to get there for that whole week over there. But anyway, that's what happened last week, and this over here is a clear indication that GU is under distribution by failing to take the high that EU took, and still showing on the DXY that there is clear and visible SMT over here. So forget order blocks, voids, breakers, all of that stuff. Just by looking at something on the higher time frame, say daily and weekly, you will be wanting to sell every single premium array on every time frame lower than the daily and the weekly. So if your bias comes from SMT, that's daily and weekly over here, like it is, daily and weekly shows us a clear visible bias. Okay, bias meaning, you know, you trade sell or you trade buy. So it's showing a sell setup over here from the daily and the weekly SMT. You will then go down to everything lower, 4 hour, 1 hour, 15, 30, whatever you want to use, and look for premium arrays once this has been created. So once this has been created, that's where you sell. And then when you do that, here is that distribution point. Price sells off. You are selling at every single premium array that you find on every time frame lower than the daily and the weekly, because the daily and the weekly SMT sell indication shows us our bias, and 4 hour, 1 hour, 30, 15, 5 and 1, that's where we get in basically. So that's how I formulated my own trade setup last week, which is, you know, pretty much something similar to what Emmanuel did as well, except I think your limit that you had set was missed. Okay, but it doesn't really matter, you know, still part of the process. And let's just quickly ask this question. So Emmanuel, not the Emmanuel that just answered, but the other Emmanuel, if we are looking at the DXY, the EU and the GU, what other currency is related to that that is opposite to it?
Opposite to GU and EU.
Yes, if we are looking at GU and EU and the DXY, what other currency can we look at to give us some kind of intermarket relationship or intermarket analysis? What currency pair? If anyone else has the answer, they can answer too.
I pass it.
Temetope, if we are trading EU and GU and the DXY, what other currency could we use to have some sort of relationship that is opposite to GU and EU? What pair can we use? What currency pair?
I'm not too sure what the pair is, but would it be one where USD comes like is named first in the pair?
Yeah, you're right.
Yeah. Okay.
Yeah. So one of the pairs that you can use, and what you said is basically where USD is the quote pair, because when you're trading GU or EU, the USD is not the quote pair. So the quote pair is the one that is coming first before the slash. So GBP and Euro is the quote, and USD is not the quote. So when you're using a quote pair that is USD based, then yes, you would see sort of an inverse direction to what EU and GU is telling you. So more specifically, when you look at a chart, one of the majors you can use is UF over here, which is the USD Swiss franc over here. And that is basically an oppositely correlated, I want to use the word correlated because that's probably the most familiar word with most of you. It is oppositely correlated to EU and GU about 85% to 90%. So that means 85 to 90% of the time, it's doing the exact opposite to what EU and GU is doing. So for example, and obviously because it's USD based, it's going to be a mirror image, well, should be as a close of a mirror image to the DXY itself. Okay, so I'm going to show you something that you can do in terms of if you're a person like me who likes to trade just EU and GU, or any dollar-based asset. This is something you can do. Now, I don't do a lot of commodities and indexes, but that's not my poison. Okay, you guys can apply this ways of thinking to those own charts of yours. The same procedure, intermarket analysis, SMT, confirmation, all be applied to those other assets, Ethereum, Bitcoins, cryptos, whatever you want to trade. I just trade forex, so I teach you on forex. For me, it just makes sense that way. I'll look at other stuff here and there, but for the most part, I'm just focused on this. So, and it really doesn't matter what you trade as long as you're consistent with it. Okay, that's all that matters. Okay, so looking at this over here, this is what is happening over here on GU. Now, if we pull over here, this up, we should have the opposite effect. So if on the last hour, price on GU has been falling, then the USD Swiss franc should also be going higher, because that means that the dollar index is going up, USD Swiss franc is going up, which means GBP USD should be going down and Euro USD should be going down over here. Now, this is a similar sort of play on what a SMT is, but the difference here is that this is an intermarket relationship. So an intermarket relationship is just something that is closely attached to what you're trading. So like Euro GBP would be closely correlated to GBP USD and Euro USD. So when Euro GBP is bullish, that means that the Euro is quite strong, because the Euro and the pound and the USD is the three strongest currencies, apart from the Swiss franc, but those are the three. And when Euro GBP is rallying higher, that gives strength to Euro. So if the dollar index goes down, that means what? Euro USD flies up. So Euro GBP flies up, Euro USD flies up most recently over here. And yes, if Euro GBP is going up, Euro USD can still go down. That is because the dollar index is weak or strong, in this case strong, so that's why it sells. Okay, so I'm going to teach you guys more on this in a few seconds. Okay, so looking at what I've just said now about the intermarket relationship, we said that USD Swiss franc is inversely correlated, the opposite to what GU and EU is doing. So when we look and compare the two, what do we need to do to trading view when we look at this over here? We need to invert it. We invert it because why? It is the quote pair USD Swiss franc, so it's going to move in the same direction as the DXY. So therefore, we need to invert it. Okay. So if we look at what happened over here, this is the dollar index versus the Swiss franc, and obviously this over here is inverted over here. So when we look over here, when this last week made a high, so let's just delete some of this over here and this one. When we look last week when it made a high over here, what we notice, or what hopefully you all notice, is that this is making equal highs, relative equal highs. Now I'm not cared about perfect equal highs or same price level, it's relative equal highs over here, whether it's 5 pips away, 10 pips away, relative equal highs over here. And if that was what I was measuring from this high over here to make the equal highs, where is the equal lows? Because the market should be moving, this USD Swiss franc should be moving symmetrically to the DXY, meaning it should be symmetrical, it should be doing the exact same thing, okay? And it wasn't, so there was manipulation. SMT is a tool to identify manipulation. What is manipulation? You accumulate longs in a discount and you distribute shorts or sells above old highs in a premium. So what do you see here? Equal highs on the dollar index, but a lower low on Swiss franc over here. Lower low for what? Why lower low? Well, if we look here, what did price trade into? Oh, what is this? There is a void there. Lo and behold, it randomly just reversed from this area because of news, guys. Must have been. I don't know what I'm talking about here. There's no such thing as void, right? Trade into this void here on this weekly time frame, and price reversed from this void. Now, not only is there a void over there, a weekly void over here, okay? When we look at that level, what is price doing? It is manipulating. So there is manipulation at a confirmation. So price manipulates to the downside on the Swiss franc, while there is no move lower, or in this case higher because it's inverted, on the dollar index. So it's making equal highs on the dollar index, or therefore it should make equal lows over here on the Swiss franc versus the dollar, but it doesn't. It pushes lower into what? Well, there's SMT at this area here. There's that daily price action that we're looking at. Sorry, we're looking at the 4-hour. So it pushes one more time lower than this low because there would be liquidity below that low over there. That would have probably been the previous day's low or something. It looks like it. Let's just double check that. The 1 hour, that would have been a previous day's low. Yeah, previous day's low. Over here, price trades into the previous day's low, closes this BISI, this void, this bullish void over here. This to this is SMT. SMT is there because price is being manipulated, not because that's weak. People are selling this. This is sell side liquidity. There's sell stops there. So what do? It's selling. So every time it's going lower, oh, they think it's going to go lower, and then they sell again. This is a problem. They don't understand manipulation. When you can understand manipulation, it significantly reduces what you see on the chart as weakness or strength based on specifically manipulation. So when you see price over here accumulating on the dollar, but manipulating because it's making a breaker formation, it's going below for a turtle soup, like we see here, equal highs, lower low, that is manipulation on the Swiss franc. And if you compare, I don't think I can add another one. Let's try and see. Over here, GBP, USD, I don't know if I can do that. Oh, okay, I can. So if we do the same thing, for example, whoopsie, then this, let's just change this to candles. Okay, so what we should be seeing over here is that if the dollar index and Swiss franc are supposed to move together, then they should be symmetrical. And the same is with the dollar and the pound, or the pound and the dollar. They should be symmetrical, but they are not. They are not symmetrical. So what happens here? While GU makes a lower high over here, Swiss franc is making a lower low. And at the same time, the dollar index is making an equal high. Let's just zoom in there so we can see it better. That specific price action. Equal highs on the dollar index, lower low on the Swiss franc, and lower high over here. So a lower low and an equal high. This one is accumulating orders below the sell side liquidity. This one is mitigating on GU, so that is a sign of weakness over here. So not only now do you have order blocks, voids, premiums, discounts, breakers, mitigations, voids, whatever you are using, you have at your disposal now SMT. On top of SMT, you can perform an intermarket analysis or intermarket relationship with pairs like this: USD, Swiss franc, GBP, USD, Euro, USD, dollar index. These are all correlated assets. So when there is a break in this correlation, this is manipulation and this is SMT. And when it is not, symmetrical, that is the best times for manipulation to occur. So what more can I show you? Well, this translates into indexes, commodities. There's associations and relationships to many things, commodities, gas, oil, there's so many relationships. You really just have to use your brain and think about it for a little bit and study the charts. I can't spoon feed for you guys for the rest of your lives. So I'm giving you the opportunity now to use this information to grow whatever asset you want to trade. Okay, you're going to have to perform the work to get to that level. I can't just tell you X, Y, and Z and then you go and do it. You need to be exposed to this, but you won't be exposed to it if you don't know it. So what I've just showed you now is the relationship. So I'm going to, obviously this relationship is translated into dailies, weeklies, sort of whatever, time frame, because it's all going to just be fractals of each other. So this is again USD Swiss franc inverted to the dollar because I've inverted the chart. So what we see here, even over here, there you can see it, that same move makes equal highs on the daily and a lower low over here on Swiss franc. So that alone is enough to give you a confluence to make a trade decision. It doesn't always have to come from the dollar index. You could use Swiss franc if you wanted to. Okay. You could even use USD CAD if you wanted to, but I'd say Swiss franc is more closely correlated to EU and GU. So you should, better do that. And USD CAD is better served with some kind of oil because it's Canadian. So you're better off using USD CAD, CAD JPY, JPYX as some kind of confluence. So I'm just going to go outside the realm of what we normally look at, and that would be just another one here. So I did bring this up last time. This is the JPYX. This is sort of like the DXY, but the yen index, if you will. And you could look at a pair, for example, I trade CAD JPY. I don't look at anything else related to the JPY, but I know there is people who like this pair, which is the pound versus the yen, sort of something similar. You must just make sure that it's not inverted because they are already opposite to each other. So you wouldn't need that to show you that, but really same procedure here. You'd be using confirmation, confluence. So for example, here we can see some clear sign that this low and this high is not symmetrical. So if price was moving below this low here, why is this index not moving there, below there? So I don't know if anyone does trade this pair. There's lots of people who do like to trade it. If it's not appealing to you, then I'm going to move on. But is there anyone here currently that trades this pair? Okay, no one. Okay, it doesn't really matter because it's the same procedure. All I'm showing you is the exact same thing over and over. So when price trades down over here, below these lows, what is it trading into? So this over here is sell side liquidity below those lows over here, and this low over here, which is sort of just equal lows really, so it's the same thing. But at the same time, this over here would be some kind of void or gap over here. So buying over here at the support level over there, something like that. When you buy over here and buy over here, it's sort of just engineering liquidity, because this is a void, and a void is referred to as gap risk, because that when you take a trade above a bullish liquidity void, there's gap risk there, because price would likely want to close that gap, so there's gap risk involved. Okay, so that's what ICT calls it, is gap risk. So it's better to trade from the gap risk than to trade because of the gap risk. So what I mean by that is, if there's a void and you're looking to take a trade, if it's not based off of a higher time frame, then just wait for price to tap into that void and buy underneath old lows. So it's very likely that the price action I'm seeing right now, that this is going to be buying over here. Okay, so I would think that it would buy probably over here into this sort of consolidated zone, possibly. Who knows? I don't know. I don't really trade this pair. But anyway, same sort of procedure. Lows, equal lows, price trades into the equal lows, raids the liquidity, closes some of the gap, and there's an opposite effect to that. So that's a lower high, that's mitigating. So if this is mitigating, then this is weakness for this yen index. And if that's weakness for the yen index, that makes it easier for the pound to go higher over here. And then boom, price likely could rally. Now I don't know what's happening here in terms of the higher time frame. Maybe there's something here on the daily that would make it rally. I don't know. But over here is some kind of rejection block. Equal lows, price trades into it, and voila. So maybe price would, want to close some of this void that it created on its way down today. I don't know. I don't trade this pair, like I say. But it's the same thing, same procedure. So looking for a buy inside of the sell side liquidity to take price back up into some kind of premium of the range, depending on, if this was a long-term analysis or just an intraday price move that you're looking to catch. It really doesn't matter, same procedure. It's inside of the sell side liquidity. So when it gets there, it's already on a high time frame occurring SMT, so you could look for a lower time frame SMT which hasn't occurred yet. Maybe it could later, but right now it hasn't. It's pretty much symmetrical on this 15-minute chart. 5-minute, let's see, still sort of symmetrical. Price hasn't really done anything that's non-symmetrical in this lower time frame, only from the higher time frame. You could buy something like a order block over here on a lower time frame, say this 15-minute order block that's inside of the sell side liquidity with a SMT based idea off of a 4-hour chart. Because remember guys, you could get a bias from weekly order blocks or voids, prices expanding in a particular direction using your PDAs, but you can also get a bias from daily, weekly bias from a SMT, like we suggested now on GU being distributed. So that bias can come from that, and then when you get a bias from any particular time frame, daily, weekly specifically, then you're basically just going to buy every discount array and sell every premium array that's made on those lower time frames once you've established a bias. That's all you do. You establish a bias, trade the premium or discount arrays on a lower time frame, and Bob's your uncle. Any questions, guys? No questions. Okay, well, that's fine. So there was one setup that you posted, I think it was Youth of Akaran, so it was gold. But yeah, basically you were looking to buy, I was looking to sell. I don't know, you mentioned that you wanted gold to expand to the upside. I couldn't see what you were seeing, so I was interested to, try and understand what you saw. But basically what I saw on gold was the following, that, since it had traded into this range over here and taken all of this trend line liquidity over here like that, this would be breakout traders, so they'd be trying to buy that over here, and then still inside of this internal range liquidity, it failed to break this high, so that would be some kind of mitigation over here, because when it made a failure swing, it tried to pierce this high, it failed, and then price traded through it. So based on the monthly here, I'm just following what I see, and price is expanding over here. It expanded, it retraced back, closed the void, and expanded lower. Month closed, price retraced a little, expanded lower. When it expanded lower, low resistance liquidity run, and retracement into a imbalance or inefficiency of price, and price is now basically traded into that inefficiency, having closed this monthly void. And also, I don't really care too much what's happening on the 4 hour. You could try and get entry or 4 hour, 1 hour, but I'm saying bias. In terms of bias, that comes from monthly, weekly, daily. I never look at 4 hour bias and things like that. I don't care unless it starts to go in sync with the higher time frame. So if price is bullish on the 4 hour, but daily, weekly, monthly is all bearish, then I'm just going to wait for it to go back into sync. So like if you look at the 4 hour, when it trades into that monthly level, so if I mark out, sorry, let's just mark out that monthly level here over there, and it was that inefficiency over there that I just said. There was this inefficiency over there on this low, so let's just get it like that. So that is a higher time frame PDA. Now remember what I said is that there'll be PDAs on all time frames, but the higher you go, the less PDAs there will be. There might not be a mitigation block, a breaker, a void, a order block, a old high, a rejection block, all in one chart, okay? Because there's less candlesticks, there's less data, and you'll just have to work with what you see. So what I see a void, an inefficiency of price action. So when price trades from this low and trades up high here, I would expect some kind of reaction from this imbalance over here, because that's where they sell, and that's where they expanded from. Yes, I see your hands up, the Vakaran. Just 1 second. So price expanded over there or retraced into that zone, and because monthly I would say is kind of still bearish. Weekly, if we look at the weekly, there has been this like sort of bounce from this low over here. Okay, what we can say about the weekly is that every up close candle that has been created has become a bearish order block, and every low that has in existence in the previous looking back on the left side of the chart here, price has expanded through those lows. So even this low here, these lows here, price stopped there, created support, price bought to induce people to buy, and then boom, it paused, retraced, and then expanded again through these lows. Low resistance liquidity run. So low resistance liquidity run is indicative of an order flow. That's why I taught you what a low resistance liquidity run is. One of the very first things you learned. Low resistance liquidity run is a void, an expansion in a particular direction where there is low resistance to the liquidity. So when it grabs liquidity, generally when there's liquidity, price should reverse. Okay, but failing to reverse and expanding through that creates low resistance liquidity runs. That's why that is so important, because that in itself is part of identification to see order flow on the chart, because all that order flow is moving in a particular direction, the trend, if you will, right? So retrace, expand, low resistance liquidity run. What's it doing now? Well, it's retracing into something. It's retracing into a PDA. Weekly is still bearish. Just because a couple of up close candles here doesn't change this trend. This trend does not change. What would invalidate this trend for me is if this high over here was taken, because then that would sort of be like a breaker formation where it took out all of this liquidity over here and then price traded straight through that. But that has not happened yet, so therefore my bias, it remains. Or even if this is an up close week here, it's just trading into this order block here. So my bias would still be bearish until this over here becomes traded to or trades higher. Then my bias may change on the weekly. But in terms of what's happening here, this is retracement. This is not reversal. Yeah, reversal on like 4-hour daily reversal, sure, but it's retracement to expand. I could be wrong. I'm all for being wrong. It's fine. I don't care if I'm wrong. It's fine. Price expanded below the low. Low resistance liquidity run. It's retracing. Retracing into what? A PDA of a higher time frame nature. Monthly void. Weekly void and failure swing mitigation. Because you see, on the monthly, I don't see this sort of mitigating taking place because there's not enough data on the candlesticks. But this failure swing fails to do anything. This is the only time where price tried to expand higher to take out this high, but failed. So therefore, that becomes mitigation. So mitigation plus monthly void, two confirmations, two different time frames, then daily. So where's the order flow going to start if the monthly is bearish, the weekly is bearish, but 4-hour and daily is bullish? So 4-hour and daily likely would have been bullish here. Daily bullish. So within this daily structure here, this 4-hour would have likely been bullish. So where is the 4-hour and daily order flow going to be aligned with the weekly that's bearish and the monthly that's bearish? At weekly or monthly levels. Weekly level of a mitigation or monthly level of a void. That's where the order flow on the lower time frame will change, because that's all that happens all the time. Daily 4-hour bullish into weekly, monthly bearish. Time and time again. Go and test it if you don't believe me. Okay, Thivakaran, you can ask your question. Go ahead.
Dan, can you change the time frame to 1 hour or 2 hours?
Sure. What do you want to look at?
So in this time frame, right, in 1 hour and 2 hours, I could see gold has taken the lows.
Sorry, I don't know why it's taking so long to load here. Okay, anyway, Thivakaran, what's the question?
If you check here, right, the lows, which is that lows has been taken by gold now, but the high, the corresponding high, it is not taken in silver.
Oh, this area over here.
Yeah.
Okay, sure. Yeah, I agree. That's
No, my question is,
this
I
here.
agree. Yeah, but I agree this can be taken as an SMT, but but on the higher time frame order flow, right, gold is in bullish. So in such scenarios, right, how can we go for a buy entry? I know buy entry is risky here, but how do we go with some more confirmation on this, or it is better to avoid buy entry?
Okay, so the only time I would ever consider buying gold right now is when it would get into some kind of deeper discount at a particular range as low. So it's come
Okay.
from this high over here,
Hmm.
and of this high, this is the low.
Oh, yeah.
So only if price comes below this low and stops and starts on like a 1 hour or a 15-minute to consolidate or pause there, would I consider trying to buy it to close this void.
Oh,
over
okay. So you will go for buy only if that low is being stop hunted, is it?
I wouldn't trade a buy, but yeah, if that was the only thing I
No,
could
no.
do,
That
then
that's
yes.
the only point. My question there here in such situation, right? How I go for a buy is from this low to that high. I draw a fib, so you can identify the equilibrium and you
Mm-hmm.
can identify the discount. So for me, right, that those two red candles, which is above date 8, those looks
That's
like an
79%.
something like that, and also that looks like an OB for me. So I go buy on this area, but I won't wait for stop hunt on the low, because when we see, I mean, this is the low, this is the recent low that has been formed, and when price comes and the candle closes this low, right, isn't that a sign of trend reversal?
Which low? This one here.
Yeah, that low, that low. If a candle comes and 4 hour candle closes below that low, then it's likely to be on the bearish order flow, right?
Based on what though?
Sorry, based on.
But if price closes below here on the 4 hour, okay, like
Uh-huh.
you said,
uh, hmm.
why this low would change the
Because that's the, if you also just a couple of minutes you also told, right, on a weekly time frame I will go for a buy when price closes that recent high.
Mm-hmm.
The same logic here also applies, right? That's on the 4 hour time. That's on the weekly time frame, where when a price crosses that high, you told I would be going for a buy. Similarly, this is the recent
Well,
low.
yeah, when you say it like that, that makes sense because all that you're doing is that if this was a buy scenario, then you're not going buy as in like the next 30 days. It might just be, intra-session or intraday buy.
No, Darren, I'm not getting it. Sorry.
If you were to buy at the Vakaran, let's say
Okay.
hypothetically right now, okay, and you put
Okay.
your stop loss wherever, but either below this lows or that low, where would your
Mhm.
target for that buy be?
Okay. My first target would be on the the line, the line that is on the right, that
This one.
no, not that one. The fourth red candle from the top. Yeah,
This
the
one.
first. Yeah. I would my close my target for half of the target at that line, because uh, that would sometimes price may hit that and again comes down. If
Mm-hmm.
not, the high.
Okay, you see, so there's nothing wrong with what you just said now, because this is a perfectly acceptable area to take profits, because this would be some kind of liquidity over here, and price has made some kind of low resistance liquidity run, and if it pauses and retraces, then this is where it's going to run into a little bit of like resistance, you know, kind of thing. So it would be
Yeah.
easy for price to get into here, but a little bit more difficult maybe for price to come up into here. So to take
Yeah.
profits there is fine. There's nothing wrong with what you just said. It's just your idea and my idea are two separate ideas, because I'm thinking bias in terms of what's happening, you know, the whole week into next week kind of thing, whereas you're maybe just thinking what's going to happen, you know, maybe today, tomorrow, and the next day kind of thing.
Yes.
And neither of us is wrong. It's just that
Mm-hmm.
you're looking intraday, I'm looking intra-week. It's the same thing.
Oh, okay. Yeah.
What you're applying to the chart is no different to what I'm doing. It's just fractal in nature. I'm looking at weekly, daily. You're looking at like 4 hour, 1 hour. It's the same thing.
Yeah.
But do you see something though, Sivakran? Like for example, here this would have been some kind of mitigation, right? Because this was a failure swing. Okay, but before that mitigation occurred, SMT occurred, right?
Yes.
Okay,
Yes.
so SMT in itself is an early warning system. Like you can get in way earlier than most people who don't even know anything about SMT, because you understand manipulation. And when you're buying in some kind of premium, you're looking for manipulation that is sell signals, not buy signals. So yes, sure, buy, no problem, whatever concept you want to use or however you want to get in, no problem. All I'm saying is that when you're in such a high level of premium and there's multiple higher time frame confirmation, and you know there's many things that suggest a sell, I wouldn't even consider this as some kind of turtle soup here, because turtle soup in a premium don't matter as much as turtle soups in a discount for below
Discount.
level.
Okay. Got it.
Turtle soups above old highs in a premium are sells. Turtle soups below old lows in a premium are just low resistance liquidity runs.
Okay.
So there might
Then.
be, like you say, there might be a retracement here. You know, maybe price decides to pause here, like it's just run into this 2 down candles and paused here, and price might retrace, like you say. But in the bigger picture of things, I still believe that if it is going to do something like this and pause here, maybe like go up here and then struggle, come back a little bit down, maybe close that void, eventually I still believe that price is heading much lower, sort of to that area over, I think it's here, that one there. Because over here is equal lows, plus over here is some kind of inefficiency. Over there. Just based on what this looks like here. So that's if the daily goes bearish, the 4 hour goes bearish. What is the next time frame higher than the 4 hour and the daily? It is the weekly. So if it starts to sell, then this would be your target. Over there, this inefficiency, this order block over here. So that's a likely target if it's going to continue and make the 4 hour bearish, make the 1 hour bearish, make the daily bearish, because the monthly and the weekly is already bearish. So now if the 4 hour and the daily go bearish, it's a high likelihood that this is going to be an easy target to hit. I could be wrong. I don't know. I'm a speculator just as much as you are. You could be more right than me. I don't even trade gold, really. I'm just saying what I see in terms of the price action.
Master is always right.
Okay, guys. So it's really just, you know, some things is objective, like the way ICT does SMT, draws out a void, marks an old high. Those things are objective. It's either you've done it right or you've done it wrong. Things like this is subjective, where Divakaran says it's going to buy intraday or intra-session, and I'm saying it's going to sell intra-day, intra-week for a longer term. both of us are right. It's just the subjectivity of the speculation of what we do in the marketplace. One's trying to buy short term and I'm trying to sell long term. It's just how things is, unfortunately, and there's no right or wrong way approach to do it. It's really just dependent on if it fits your strategy or your entry protocol, then you take the risk. That's where the risk comes in. So I don't have better answers, unfortunately, for that, Savakran, but hopefully you understand what I'm trying to say. I do understand what you're trying to say, but effectively that is where we are with gold. So, you probably now never looked at a gold chart again differently like before, because, you probably weren't employing SMT as much as you are now. So I'm sure that it's helped you a lot in determining, setups to buy or sell.
I mean, it's not only gold that.
Sorry?
Yeah. Any chart, I'm trying to link the SMT concepts with it.
Yeah, no, it's great. It's nothing wrong with that. But you can, let's just for interest's sake quickly, just to wrap up this one little section here. Oh wait, let's just, yeah, we can do that. What we said last week about another currency that's also sort of linked to gold, which is like the dollar versus the rand over here. And we just pull this up and we can just see as sort of another layer to our expectation. And then, oh, whoopsie. Change that to candles. So generally what should happen is that, what did I say? Anyone remember?
That we don't invert USDs.
Sorry, that we don't what?
We don't invert the USDs.
Oh yeah, we don't invert it, correct? Yeah, because obviously the USD, it's the quote pair, and on here gold is the quote. So yes, you're right. We don't say that. So if we wanted to, let's just remove silver out of the equation for now and look at just this two. We already know what silver and gold's doing, but let's just look at this now. So they're already inverted towards each other. And let's say that we do in fact believe that on the daily chart and on the monthly chart and the higher time frame suggesting a sell. Is there a sell on USD or a buy on USD ZAR rather? If this is going to buy, then that one should sell. And price did come into this weekly void, test that order block, and maybe price is going to go higher now. So who knows? Interesting to see and watch it play out. Okay, guys, let's just take a 5-minute break. So this would be some kind of bullish little maybe order block or something, little rough sketch of something like that. Well, that would be the the down close candle, because this would be black bearish. And over here, let's say that this would be the preceding candle over here. So this candle would have closed over here, and the new one would have formed, and price would have traded higher over here, right? So maybe something like that, and a little bit of a wick here. Or doesn't even have to have a wick. It can have like almost no wick. Doesn't really matter. Okay. All I'm showing you is that what is this over here?
That's a bullish order block.
Yeah, it's a bullish order block. So generally, if this is like a 4-hour, if this is a daily, we'd want to try and buy this, right? Because there was maybe a void from this wick here all the way to here. There's a void, so price would naturally want to maybe retrace over here and then continue higher, right? That's generally what we would do with the order block, is we try and buy from this internal range liquidity. This would be the external range liquidity, and then we buy internal and we target external. That would be the order block, whether this is 4-hour, daily, weekly, whatever, right? But when oh, I hate the word, but I'm going to use it anyway. When market structure tells you otherwise, okay, my view of market structure is definitely not the same as everyone else's view of market structure, because they are looking at lower lows and higher highs and what, okay, but in comparison, I'm comparing highs and lows to the DXY, okay, or the correlating asset like I've showed you with Bitcoin, Ethereum, or gold and silver, or oil and CAD, or S&P 500 and the NASDAQ, or whatever, you know, whatever you choose to trade. Okay, this is a simple structure that most people know in terms of when you speak of ICT, they know what an order block is. They say that you buy at the last down close candle and boom, there you go. Okay, but what they don't tell you is preceding the information given to you before this structure is created. What happened? Okay, so it's all very well that, you know, we try and buy this order block over here, but what happened in terms of, you know, did price come from a low, like push up higher here, something like this, and then make this down candle, or did price come from a high up here and push down to make that last down close candle? Okay, really what happened preceding this order block is quite important, and that translates into 4 hour, 1 hour, daily. What happened to this left side over here of this chart? What happened there? Because that's going to be really what the higher time frame is, whether that be the 15-minute, the 5-minute, doesn't matter. Like I said, whether this is a 5-minute structure, a 5-hour structure, or a 5-day structure, not that you get that, but doesn't matter. What happened to the left? Because the left is what happened in the past, which is higher time frame. So whether you look at a 5-minute chart, 5-day chart, that to the left is the higher time frame. Okay, so when you make a high over here, let's say maybe you made a peak high there, whatever, and then there's like liquidity there, and you know, price had zoomed out here and come all the way from this low, whatever, down here like this, and this structure here didn't happen. Okay, so we've come over there and we've traded lower now here, and we've come all the way up here from this low all the way up here to this high. Okay, now it's all very well that, you know, it's now starting to go lower, and boom, there we go, we get a daily or a weekly bullish order block. That's a higher time frame confluence, or confirmation rather, to tell you to buy, right? But what they don't tell you when you're looking at through the glasses of an ICT trader is that what is going on here in terms of this swing high and in terms of this swing low. Because the only way you're going to know if this is a valid order block is by determining when this occurred. Was this actually just manipulation? Was it strength? What happened here? Because the only way you're going to know that is by looking at something that is correlated to the asset, and whether this asset be oil or gold or silver or index or crypto, whatever, doesn't matter, whatever. Okay, you need to look at the corresponding asset class. So if we are looking at the corresponding asset class, it would have likely come down and made a low like that one made a high and started to rally away here. Okay, so in order for this to be some kind of valid bullish order block that we are wanting to trade here, when the correlating asset class fails over here to take out that liquidity, then that is a good what setup? Is that symmetrical or non-symmetrical? If price now makes in reverse here some kind of bearish order block over here, so that would be something like this, makes an up close candle over here like this, little wick maybe, and then makes, you know, bearish order block, okay, but fails to take out that low over there, or makes equal lows, something like that, okay, that is a symmetrical move. So this is sometimes symmetrical moves can be a good thing, right? So it's not all bad. I mean, when you learn ICT and you learn SMT, you're learning manipulation, but at the same time you're learning, you know, corresponding asset classes, and are they moving symmetrically, are they detached from one another, are they being manipulated? And this is really where it's at, because what you want to see, whether this be the DXY up top here, okay, and whatever this is, the foreign, so this is whatever like GU or EU or something over here, what you'll want to see for this order block that's bullish that you want to buy to be valid is that the DXY over here should either mitigate and make an equal sort of area here, but not breach that low, because if it's breaching that low, this over here is SMT, right, happening over here, the fact that it makes this equal low here. And if it breaches the low of this liquidity here, then that too is what? SMT, by trading lower here, because then you are basically connecting the dots from here to there, and from here to there. Now, yeah, you guys know this. This is SMT. It's not showing you anything new, but I'm just telling you in terms of what you already know now and using it to your advantage, implementing what you've learned. Okay, so the next time you perceive the market to indicate to you that there is a bullish order block, what happened to the left of the chart? Was it really a bullish order block, or was it just so happening to be an engulfing candle? Because not all engulfing candles is order blocks, guys. It's really not. If that was the case, then every time there was an engulfing candle, we just put a limit and execute the position, and then you just make money. But it's not like that. So it's our job to filter out what is and is not actual order blocks, okay, or actual strength or actual weakness, by deciphering what happened prior to this information. Because if the DXY made the lower low here, or made the equal low here, then why did GU or EU not make the higher high over here? Where's the higher high? Okay, it didn't happen. So therefore, this little bullish order block over here is likely just an engulfing candle that's just going to be traded through, and actually likely to become a bearish order block, because price would just trade through it, making this the order block over here, retrace to it, and then sell again down like that. So this is true order blocks, true voids. I'm teaching you how to apply manipulation to your chart so that you can read it better from what you may or may not have known already about ICT. So I'm not sort of changing your whole perception of the market, although it should have shifted slightly. All I'm suggesting to you is that the next time you look for an order block to buy at, or a void that gets closed that you want to sell at, or something like that, or whatever you were doing, trading mitigations or breakers, seeing on the chart if the correlating asset is moving symmetrically or non-symmetrically to that perceived trade idea. Because if the perceived trade idea is that this is a bullish order block and we should go higher, then when the DXY on the same time frame went lower than this high here and this low here, then we should have had the same symmetrical move over here on the foreign asset, whether that be gold, oil, or gas, or whatever you're going to trade. But the fail to do so creates manipulation. And when there is manipulation, that is when institutions are at their most prominent. And also, if you've studied now this SMT long enough, you'll find that big news events that create high volatility, not saying now that news creates bias and direction, when news events occur, they increase the market reactiveness or volatility or speed of the market. And all that's happening is that they are using that news as a vehicle to do what they really need to do. And how do we know what they really need to do? By understanding the manipulation part. That's where the true key of ICT lies, is in the manipulation. By seeing manipulation, you are clearly painting an accurate picture. So while the other ICT traders or the ICT wannabes or the guys who are not really understanding the full sort of scope of ICT, they are the ones trying to buy this bullish order block here. We, on the other hand, understand that yes, it looks like a bullish order block, but it's not. And that is because we understand manipulation. So having said what I've just said now, what is stronger? A weekly bullish order block or weekly manipulation? Anyone care to answer?
Weekly manipulation.
Manipulation.
Yes, because before the order block is even created, before the void is created, before even price makes a swing high or makes a swing low, the market is either being accumulated or it is being distributed. And yeah, sure, it's going to consolidate sometimes and whatever. But when you understand manipulation, you can get in way earlier than you would have ever thought by understanding manipulation from a 4-hour perspective, 1 hour, whatever. Okay, based on the old high, the order block, and the void, that 3 institutional reference points. Because you'll be the guy selling this up close candle when everyone's waiting for the retracement to buy. But meanwhile, when it's retracing to buy, you're getting in and you're already running in profit, and they're now sitting on the edge of their seat, almost hitting their stop loss, because they're trying to buy the manipulated candle that looks like an order block that's actually just manipulation. Does this make sense to you guys?
100%.
And now add on top of this the fact that where did we come from in the foreign asset, GU or EU? We came from a low to a high. So then that puts this high and whatever's below here as a low, and then in the middle here would be an equilibrium. So now not only are you trying to now buy a daily order block that looks like a daily order block in a premium, you're buying a potential look-like order block that actually was manipulation. So this will give you food for thought as to the next approach that you take when you look at the chart again on whatever time frame, by determining a premium and a discount. And I've taught you guys how to do that using an IPTA data range. And sometimes the price will just be in a premium for a while, might consolidate in an equilibrium. There's many different conditions the market will go through to get to where it wants to be. But in the essence of what I'm saying here effectively is that if you understand manipulation based on the higher time frame, why the higher time frame? Because the higher time frame is where the institutions manipulate. They don't care about 1 minute and things like that. Yeah, sure, orders is placed and that on different price levels. You can get entry off of a 1 minute and whatever 5 and 15. I'm not teaching you that because that's fractal. I'm teaching it to you because that is how the market works according to daily and weekly. You got a question, Roger?
No question, Darren. Just joined a little bit late. Hello, everybody.
Oh, right. Okay. So I was just saying, Roger, that this is the manipulation. And if you understand manipulation, then this over here is not actually, this guy here is not actually a bullish order block, but rather just an engulfing candle that potentially looks like an order block that other people are trying to associate to a buy setup. So again, For example, the same structure, down close candle, right? Over here, whatever, with a wick or whatever, and then preceding candle over here, a candle like this, for example. How do we know that, obviously thinking of what this is to that old high to where this one closed, this area in between here, from this area here to this area here, is the void, right? Now, how do we know that when price decides, or if it decides to trade lower here, that it's not just going to stop here and reverse, but is it going to pause here and consolidate and go higher, or is it going to pause here, consolidate and go lower? And the only way that it's likely to tell you that is by using the higher time frame, higher than the one that makes this structure, and determining the correlating asset by telling you that when it went up, was it a symmetrical move or was it a non-symmetrical move? Because then you don't have a problem by saying, I don't care that this looks like a bullish order block, because this sometimes can look like a bullish order block, but then boom, price just drops straight through it. Anyone seen that before?
Most of the
many
time.
times.
Exactly. And
Last week.
if you go back in history and you go look for those times where there's this huge up close candle on like a weekly or a daily or 4 hours, or just as an exercise, go look at the last big lookalike bullish order block or bearish order block and correlate whatever asset class that is, and look if there was SMT there, because that will tell you why it did what it did. Every candle that is up close will effectively then just become a bearish order block, especially if that was some kind of premium. And price loves to do this in a premium, because this induces buyers to come in and step in when it's already been moving higher, and you get this like huge volume candle. People who say, oh, we're going to trade VWAP and volume profile, that's garbage, because I'll tell you now, that volume profile and that VWAP indicator stuff has got nothing to do with every different broker, because when you're looking at that indicator, it's telling you the VWAP and the volume profile of the individual broker you're looking at, plus that volume that you see might just have been manipulated. So who's actually in control here? The manipulator, not the person who's trying to trade the volume or whatever. When you're trying to look for VWAP or volume profile with a order block in this lacquer nice zone of big volumed candle, and there's a lot of volume there, and the volume profile tells you it's a buy, is there manipulation? That's more effective than any indicator. And you draw your own indicator. SMT is your own indicator based on price action, nothing to do with indicators and volumes and whatever else is the next holy grail. This is where it's at, folks, is manipulation. If you can read manipulation, you'll be fine. You can be 30% accurate on your trades if you want to be, and you can make big moves. Any questions, guys?
Nothing off the top from my side, Darren.
Okay, so as an exercise, what I would recommend is the next time, so let's just pick a time over here on a clean chart, for example, and let's say a daily, right? So let's go and say, I don't know, an area where you find a bullish order block, but then just gets traded straight through. Okay, I can see one right there over here. So it looked like it was going bullish here, because over here it made like this order block, and then last down candle, price traded, retested, went higher, broke that high over there, So, you know, it looked like it was going high and then a little bit of a retracement back into this down candle and then boom, it traded high. So one would think that, you know, if it gets back to this little void over there and it closes it, that we should have a response to, you know, go bullish again, right? And then boom, it just trades straight through it. Trade lost. Emmanuel, your hands up. What's up? Go ahead.
Sorry, my question is not related to today's lesson, but I wanted to ask if there is indicator for if the days.
For what?
If the data, the one that is
Oh, okay, good question. I'll answer that in a second for you. Okay, so this is an up close candle. This is last down close area, order block retested, boom, price rallies. Here's a void, so you know we'd expect that, you know, when it gets there, boom, price, you know, trades straight through it. Okay, now, okay, I don't know what happened. I don't really care either on the, I'm not going to look at other time frames, but let's just say that over here, this was the 20, or the last of the March, basically. So the end of March, basically, there was this void over here, and it looked like, you know, price was going to go higher, and then basically just traded straight through that zone over there. So let's just go and look, see if any sort of manipulation occurred, and we can get our answer straight then and there. So that towards the end of March, oh, that's over here. Where was it now? This one, I think, yeah. Okay, so end of March over here. So end of March, let's have a look here. Over here, do we see what's happening? Okay, well, I can see that, yes, these two lows over here was taken by this move higher over here. This came from a premium. So if it moved into a discount, then we would anticipate a symmetrical move over here on the DXY. We do not see that over there because we can just see price trading higher, whereas the same over here. So it's a symmetrical market. But in terms of when price traded in here, was there manipulation? So when we look and compare these candlesticks over here, these candles over here is basically these two candles over here. So if we mark that out, here is those same two candles. Now the one you can see is bullish, the one is bearish, and this one's got two bullish ones, doesn't really matter. Same thing, and we pull that across there, we can see that there's no symmetry here. So remember, SMT can be done in many ways. It can be done with a swing highs, can be done with the open high, the low, and the close. But in essence, it's really the same thing here. So when EU was trading into these two candles over here, it should have done so on the DXY, and it didn't. It did take the lows, but it failed to do a symmetrical move over here, and therefore this occurred over here. Now that looks to me more rewarding on a higher time frame than just this daily chart, but it's the same thing. Temitope, go ahead. You got a question?
Yeah, quick question on what you just said. With SMT, it can happen on anything, like you said, like swing highs, swing lows, voids, order blocks, those sorts of things. If I literally just see like, oh, one made a swing high and one didn't make a swing high, is that enough to go off that is SMT, or are there, like, essentially, is it just if any one thing isn't symmetrical, or does it have to be a number of things?
So it can be, you can go off anything, any array. So like, for example, there should be a corresponding breaker on both ends. So like if there's a mitigation on EU, there should be a mitigation in reverse on the DXY. And if the one trades into the mitigation and the other one does not, then it's a trade. If the one trades into the breaker but the one does not, then it's an SMT. If the one closes the void and the one doesn't, it's a SMT. If the one tests the order block and the one doesn't, that's an SMT. If the one turtle soups the high and the other one doesn't, that's an SMT. And obviously as you go up into the array towards the old high, the stronger the confluence, because that's your array. So when you go towards the old high and you're turtle souping the old high, that's a strong high premium. And when you go down to the low, the old low, you know, you depends where you're trading in the array. Are you trading a void? Because then it's not the deepest discount. If you're trading the order block, it's not the deepest discount. If you're trading the rejection block and the old low or the old high, that's a higher level of premium and discount. So that's where more frequent manipulation occurs, because there's
Okay.
more liquidity there at the higher end of the range or the lower end of the range. There's more liquidity, more orders, more sell side, more buy side.
Okay, makes sense. And so just like expanding on that, would there ever be a case where like the lower ones aren't symmetrical, but then the higher ones are? I'm not sure if that's making sense. So for example, lower down the array, like a swing point, for example, would there ever be a point that those aren't symmetrical, but then you can see a void, for example, is symmetrical? I'm not sure if that makes sense.
No, it doesn't really make sense.
Okay, no worries. No worries. It's fine. It's fine.
Sort of maybe over here, the swings make sense, but the voids and the order blocks don't. So maybe
Yeah.
here would be an example of that.
Okay. Cool.
Like here, the swings over here
Mm-hmm.
are both, there's a swing there, so that's an SMT, right? Over there. But
Yeah.
then there's also, in that same price action, you can see there's a void here on the DXY that does not get closed. But this void
Mhm.
is that same void on the EU, but it does get closed.
Yeah.
Does that make sense?
Yeah. That was my question. Thank you.
And even if like there wasn't symmetrical move, was a symmetrical move here, and this wasn't SMT here, okay, then this, by closing this void and this one not closing that void, that's SMT on its own. So there's
Yeah.
actually, not only is there SMT in terms of the swing low here and the swing high, making this like swing high to swing high and swing low to swing low kind of thing, but
Mhm.
there's double SMT here in terms of the void also not being closed over
Yeah.
there.
Yeah.
So
Makes
sometimes
sense.
that can happen, like, you know, there could be double SMT in a particular zone where,
Mhm.
you know, the swing highs are, say, suggesting an SMT, but at the same time, there's also a void that got closed on the one that the other one didn't. And you'll have to really practice it to get used to how it feels, because I can't like draw out every possible scenario, but having the, you know, the right way of thinking and approach to seeing it can make the difference between understanding it and not understanding it. So sort of like what I just said now, where, you know, this would be a bullish void, right? Over here. Oopsie. Over here. So like price would have come in here, and then like, let's say this is a bullish order block, right? Last down candle, move higher. Here's a void. So people will be trying to maybe buy this void, right? When it gets closed over
Yeah.
there. Now I wouldn't, because of the fact it's in a premium and because of the fact it manipulated up top here in a premium. So I would see this as just an imbalance and price would come in and trade lower. I wouldn't see it as something I would want to buy because it manipulated. So for
Yeah.
me, manipulation is more important than an order block or a void. If I can identify manipulation, then that alone is enough for me to have a bias,
Yeah. Makes
especially
sense.
on like a daily and a weekly scenario. If it's like, you know, 1 hour and things, then that's just small time frames. But when it's confirmed by like a daily and a weekly, that is more powerful than pretty much any arsenal ever in terms of ICT stuff or Wyckoff or whatever.
Okay. Thank you.
Okay, so to answer your question there, Emmanuel, so are you talking about trading view or MetaTrader for the IPTA data range?
MetaTrader.
Okay, so for MetaTrader, it's pretty easy. So you come here to your chart and let's get a new pair. It's easy. You can do it manually like I showed you, or you can do it, you know, with this tool here. And this is a Fibonacci time zone over here. And you just pull this basically. It's already set up on my side, but you'd come in here and edit this Fibonacci time zone properties and just change it from 1, 2, 3, etc. like this over here, and change the names like to 120 days, 180, you know, separated by 20 days. And then basically it's a very quick way to pull an IPTA data range, and it's all applied here in the settings, so you don't have to keep setting it, but basically it's very quick. So each thing is separated over here. So basically you just anchor from 1 month to 1 month, and then it already does 20, 40, 60, 80, 100, 120. Simple. So you just put these settings in. I can send them to you, it's not a problem. 1, 2, 3, 4, 5, or whatever, how many you want, and then you just put the description. You could put whatever in the description, and then when that settings is done, you just anchor. So where is the new month? Over, let's go to a daily chart over here. So let's go to a daily and anchor the new month, which was here. So there's the new month, and then I just look for the previous month over here. Where did that start? Over here. So this candle here is the other month, and then I do that, and then I just do this, and I take my Fibonacci time zone and I pull it from this one to this one. Boom, 20 days, 40 days, 60 days. Then you can easily see the liquidity of as many days as you want over here. And that's the easiest way I know how to do it. And if you want to do it with MetaTrader, sure, there's a time zone one on TradingView. I've never tried. So if there's anyone who knows there is one, you can go and investigate it or YouTube it or whatever, but that would be the easiest way to pull a IPTA data range. You can just have 60, you don't have to have 120, but that's the quickest way I know how to do it. You wanted to say something? Is that right for you? You understand, Emmanuel? Okay. But yeah, that's the quickest way. So, you know, you guys, your homework is just really just practice and keep practicing what you've learned and what I've been teaching you. You know, it's all very well. I could spend weeks on ends with you looking at price action and, you know, doing this, doing that, but it really comes down to spending time on the charts and getting exposure and getting experience. So that's going to come down to you guys, you know. So I don't have more to teach you right for today. So that will be it for today's lesson. And, you know, just keep doing what you're doing. And if you need to, go through the videos again of the previous teachings. But where it's at is manipulation, guys. If you can understand manipulation, then you can do pretty much anything you want on the charts. Let's just have a quick look here. Oh, look at that. There was a manipulation here and boom, price rallied. You know, it might just be a short-term rally, but I mean, if that's what you're targeting, then, you know, that's your goal. So there was this little manipulation here. We just said it like 5 minutes ago. It's amazing, isn't it? Before it happened, I told you it happened. So there was the manipulation over here on the 4 hour, where we see GU trading into these lows, like I said, over here, but the DXY not trading into these highs. So this one is mitigating by trading into that, and this one over here, or sorry, turtle swooping, and this one is mitigating. Boom, there you go, by 5 minute SMT. Right there, equal high. Ta-da! Okay, guys. Have a good week. Good luck and good trading.
Thanks, Dan.
Thanks, Aaron.